The market had 3 pushes down, and Friday broke twice below the trend channel line and reversed up. And if that was not a Friday, I would have bought calls there because the chance of a gap up was pretty good. But I didn't want to pay for a premium over a weekend because volatility was way up on Friday. If a person bought up the calls here at this point on the day, you'd say, you should be up, but you wouldn't be up. Your calls would actually be below the price you paid for them. To me, that just illustrates that even though you get the higher low on the E-mini and the spider on the calls, you actually had a lower low. That was a risk that I didn't want to take. Possible trend from the first bar up or down, good size gap. Typically in this kind of a situation, a reversal out of the bottom of a channel, a break of a trend line, a gap bar. To me, I think the odds strongly favor a gap breakout pullback long. So you can either look to short the failed breakout because there's enough room for it to come down and test the moving average and yesterday's close. So you can trade that down and then look to buy down here, or just wait to go long at a potential higher low after a trend line break. Okay, inside bar, again, a doji, barbed wire. So you're assuming that the market's in breakout mode. You could trade the breakout of the top or the bottom of the barbed wire. At the time, I thought all day that we were going to have a breakout pullback, breakout above the trend line and a deep pullback. So I was not going to buy above there. Okay, IOI. Usually you can trade the breakout of the second inside bar. It broke to the upside. As I said, I wasn't going to buy it. I'm only looking to sell. So theoretically, you could sell below, but we had that report coming out. I didn't want to trade the report because too much risk of. Actually, I think it went down a few ticks and then it reversed up, and I didn't want to trade it. So this is basically an outside bar. You have trap shorts here, trap longs here. To me, it's reasonable to short below the low of that outside bar. Now, a gap bar, but not really a strong bull yet, and it tests below the moving average and a test of yesterday's close. To me, that's an okay. Plus, it's a trend bar, 2 trend bar breakout of barbed wire, and trend bar breakouts out of barbed wire have a pretty high chance of reversing back up toward the barbed wire. Did I think that this was going to be the low of the day? I didn't think so, because normally you get a decent looking entry on these breakout pullback trend reversals. The market came up, tested the breakout for the shorts. This selling looked like it was enough so that I thought that there would be at least a second leg down, maybe a double bottom, preferably a lower low. I preferred to have the lower low. This is a small bar to support a significant reversal. I'm looking for a trend reversal of a major bear move on the 5-minute chart, and a 4-tick doji bar to me doesn't look strong enough to for the market to rest on its shoulders. So to me, if a trader were buying that, to me that's just a scalp. Nice looking bar out of it, but I'm looking at double top bear flag. To me, I thought that there was more down. This had a lot of down momentum. And if I were to short this as a low 2, 2-legged sideways pullback, I probably would scalp it. That's a short that I did not take because I was in buy mode. Okay? Not ideal at this point. To me, you have a 2-legged lower low, but a lot of black bars and not a great reversal. I think you're more or less stuck having to take it, but not liking it, and assuming that there would be a test and maybe a channel, that this could be a spike and a first push, second push, maybe a third push. At this point, if you bought this, you'd say, it doesn't look good. Looks like another lower high, lower high, lower high, lower high, lower low, and possible wedge bull flag bottom. At this point, you got your wedge bull flag, you got your deep pullback to a higher low after a reversal out of the bottom of the channel and a trend line break. And a 10-point or 12-point move off the low. To me, this is a setup for a trend reversal for at least a second leg up. Not a great looking signal bar, but at least it had a bullish close. So, to me, you have to take it even though it doesn't look strong. This is a possible short for a double top bear flag. a lot of times when you have setups that don't look like strong buys, you'll have a pullback to a higher low. So you broke this trend line and you got this higher low. Now the market broke this trend line and it could be a higher low breakout pullback from the breakout above that trend line. Would I short that? It's a bear reversal bar at the moving average. I prefer bear reversal bar shorts to be below the moving average. So I wouldn't short that. Also, since in my mind, the market might have made a trend reversal, I'm in buy mode, not sell mode. And instead the market went up. It's just a possible inside bar final flag leading to a two-leg sell-off, maybe to a wedge bull flag. It's possible, but I'm still in buy mode. You've got a little high two here. There's a high one, there's a high two. And then you have the trend line at the top of the channel. Market trying to go down. You have a two-bar reversal, but two-bar reversals, early entrants can trade below the bear bar, but I think that's a mistake. I think too often you get trapped. I think you have to take the worst entry, which is below both bars. You're getting in at a worse price, but you get a higher chance of success. Okay, so one tick trap. Would I buy it? I wouldn't buy it, but it could work. The market looks like it could be forming a channel, and you got this little possible spike. Now again, the market is kind of weak up here. You got three little pushes up, 1, 2, 3. This is a one tick breakout above that, so it could be a wedge two short. So is the market starting to roll over? Maybe. You got 1, 2, 3 pushes. You have 1, 2, 3 pushes that didn't hit the line. The market has a trading range look. So despite the higher low, you get a lot of two-sided trading in here. So to me, that's worth an attempt at a short because you could get a breakout pullback. The bottom didn't look all that. Now you get a possible setup for a high two, but it's above the moving average. I wouldn't go long here. I would just go, and if my stop gets hit, it gets hit. And then at this point, I would start thinking about, okay, you got 5 ticks. If I didn't get filled, I might move my stop to break even. Okay, would I buy this as a possible wedge bull flag? This tail is one push down. There's another push down. There's another push down. Not great looking, but possible. It could be a breakout pullback. You broke above this trend line. You're pulling back. But that to me is not a great looking setup. Okay, this makes it a little bit worse. An II bar, 2-tick doji. Okay, you got this wedge. This could be forming a wedge two short. Okay, that's good. You got a 1-tick breakout above this high. 1 push, 2 pushes, 3 push. To me, that's a possible setup for a test down. Although I don't like the close on that bar. I do like the close on that bar, but not on this bar. So again, the market might be forming a high two. Here's a high one. Here's a high two. And this could become a wedge bull flag. 1 push down, 2 pushes down, 3 pushes down. I'm not enthusiastic. And this is a pretty hard down move. It's possible this could just form 2 legs up and then another test down. You're testing the high here. So you got a double top. The wedge top should hold. Okay, another attempt down, but this time 5-tick failure again. Okay, here you got a bull trend bar with an entry above the moving average. That's an okay long. Also, it's a channel, and channel breakouts typically fail on first attempt. So that's okay. In my mind, though, trading range on a trading range day, I'm looking for shorts. New high in the day. A lot of times on trading range days, you just get one chance to enter short. So you got to be looking short. An outside down bar with a bad close. I'm gonna look to short below its low. Okay, market's trying to bounce off the trend line. Okay, now you have a downward channel. First breakout of a channel usually fails, so I certainly wouldn't buy that. I'm expecting more down. A 5-tick possible failure. Do you short below it, thinking that there's more down? Head and shoulders top. Breakout pullback. Lower high after a higher high. Okay, we got a higher high in the day. Might be forming a lower high. That's okay. Okay, strong breakout bar. Trading range day and a trend bar closing on its low below a swing low. But it looks like it's creating a thin area. To me, this looks like a breakout that should have more down, and that's where we are.